Hi, my name is John Stevenson, also known as the Guaranteed Retirement Guy. Today we're going to be talking about why traditional retirement strategies are not working. So, a traditional retirement strategy, at least from what I have seen from so many of my clients who have come to me after working with their advisors, is their advisor will put them into something like a mutual fund strategy where, you've got some bonds, you got some stocks, and maybe you got some mutual funds that are they got some growth products in there, and they have some market protection, but not all, and they give you income based off of hypothetical projections. And a lot of my clients don't like that because they're getting hypotheticals. They're like, all right, well, I got a percentage chance that my money won't run out. But there's not 100% certainty because things could change in the market, and things do change. Okay, things that, the market was acting very, very differently in the 70s. That's when they came out with the 4% withdrawal rate. And then it started changing a lot after that, where the 4% withdrawal rate no longer applies. Now it's more like 2%. Okay, and that's a problem when you're thinking about a retirement of maybe 30 or 40 years, and you want to make sure your money does not run out. And you're talking to your advisor, and you're like, I really want to make sure that my money doesn't run out. And they're like, well, this has worked in the past. And you're like, okay, well, there's no guarantee that it's going to work in the future because they're basing it off of the past. They're basing it off of the market, and that's all they can do. I mean, they got to base it off of what data they have, which definitely works when you're doing a hypothetical illustration and you're showing as long as you have a withdrawal rate at this and as long as your investments earn this, which it should, then you should have this income for the rest of your life. Okay, it shouldn't run out, and hopefully you'll have this much at the end of your end of your life to leave to your kids, or maybe not, just depends. And so the problem with that, of course, is you're like, all right, well, that sounds good, and hopefully that will work out, but it's not guaranteed. It's not contractual. How can I get it contractual? And that's a lot of times where they're like, well, we don't have anything contractual unless you want to buy this annuity that we have. Our broker gives us access to this one annuity or maybe two annuities, and that's what they'll sell you. And you can get contractual guarantees from those, but then you find out there's better annuities out there and you didn't realize that they weren't showing you everything because that's not their wheelhouse. They're more interested in mutual funds and assets under management and charging the fee for that. And so because of that, they're not showing you everything that's available to you contractually that you can use your money for. So I'm about to do that. And if you notice, if you look at my videos and look at my channel, there are lots and lots of annuities out there. And it's really good to know what's available to you for your hard-earned money, and so that you can make the best decision for yourself. Okay. So I'm going to share my screen and I'm going to show you exactly what this could look like for you. But again, if you want to actually run the numbers yourself, go to my website, johnstevenson.com. You will see my annuity calculators there, and you can plug in the numbers and get real numbers for you. Okay. And you can book a call with me there as well. Or you could book a call with me right now below this video. There is a link that goes directly to my calendar and we can chat. So if you're looking to purchase an annuity, you're looking to purchase contractual income, or you're just looking to protect your money against market risk and you want some indexed annuity strategies, then we can look at those. Okay. All right. So let's look at just an example. This is someone in Florida who's single. If you're married, then that'll change the numbers and we can look at that. But $500,000, let's say they put $500,000 in and they're like, I'm going to let this sit for 5 years. I'm going to take income at 67. What is my income going to be? And maybe I'll wait longer. Can I wait longer? Yes, absolutely. These are flexible. So if you look at the payout for 67, shows Delaware, F&G, Corbridge, and so on. So you can see the highest payouts around $55,000 a year, guaranteed for the rest of your life. That's really good. Okay, you take that out for 30 years, you're taking out $1.5 million in pension money. You take more out, you live longer, you will take more out because it's guaranteed for life. So that is straightforward. If you're looking for contractual income, you see this, there's a lot of options out there, a lot of options. And I have advisors that will just push one or two of these, and that's it. Or maybe not any of these. Maybe they'll just push one that their broker-dealer gives them access to. And a lot of times it's just not the highest payout. So you have to know what's available to you. Okay. And a lot of these companies have been around for 100 years or more. So we're not dealing with companies that, especially with lifetime income, that have been around for a day. Okay. We want companies that have longevity and have safety. Okay, so we got $55,796, but then you might be thinking, well, what if I don't take income at 67? What if I decide at 67 that I enjoy my work, I don't want to stop, and I want to maximize my Social Security benefits at age 70? You can do that. So we'll push it out to 70, and we'll see exactly what those numbers look like. Same 500 grand. All right, quite a difference. $70,000 per year, guaranteed income from just 500 grand. Wow, that's huge. Okay, and that's guaranteed. That is contractual. There are no hypotheticals. It is no, hey, if this does this, then your income will be this. Hopefully, it is contractual. This is guaranteed. This will not change. Okay, this is when you buy life insurance from an insurance company, it's contractual. It's a contract. Okay, you're giving them a premium, and in return for that premium, as long as you stay current, then they're going to give you a guaranteed payout to your beneficiaries if you pass away. That is what it's for. It is contract. And so that's why people buy contracts, because it is absolute. Okay. It's the same with annuities. You're buying an absolute payout for life. That's what you're buying. So if you look at this one, let's just look at Delaware. Delaware is a little bit newer of a company. They're A-. They're still solid, but if you're looking for maybe something just a little bit stronger, well, a lot stronger, then Midland National is probably the best one. And you'll notice the payout is not much of a difference. So if you're looking for something, a company that's been around, I think Delaware has been around since 2013. So with Midland, they've been around a lot longer, like 119 years. So if we look at that and say, okay, let's just look at Midland. So if we look at Midland, I'll just show you what it looks like. All right, so if you were to take income out at 70, they're going to take almost 14%. That's the withdrawal rate. Crazy, right? A lot higher than what you're going to do in your current portfolio. And because it's a contract, okay, they're giving you a contract of income. It's a lot different when you have a contract of income versus just hypotheticals, okay? Based off of 500 grand and based off of you waiting 8 years to take income, because you're 62 and you take it at 70, they're going to take 14% almost, multiply it by 500,000 and give you almost $70,000 a year guaranteed for the rest of your life. Wow. You take that out to your 95, you take it out $1.8 million. Simple as that, okay? Now, if you decide to take it out earlier, you can. That's what's nice about these. Life changes. And you might say, well, I'm 67, I'm going to take income. Okay, fine. 57 grand. Okay. That's the great thing about this is you can decide for yourself when to take income. And you might decide at 70, I'm going to wait longer. I'm going to wait till my RMD age because this is an IRA and I don't have to take it out till I'm 73. And so I'm going to wait as long as I can. Okay. Well, you can. That's what's nice about these is you absolutely can push it out. So at 73, push it out longer, even much higher income payouts. Okay. Now we're bumping up to $86,000 a year, guaranteed for the rest of your life. And that's only because you just let the contract grow longer. That's what happens when you let it grow. You get a higher payout. So if we look at that illustration, we can see that the payout is now 17.26 multiplied by 500,000, giving you the 86K. So you can see down there at age 70, it was that 14% right there, right? So you let it wait, just a few years longer, gives you higher payouts. So, and you can see on this column right here, it's showing you what the payout is every year you decide to wait. That's what you lock in for life. So anyways, I just want to show that to you because there are lots of ways to generate income from your portfolio. But a lot of you are looking for something that is contractual and you're not sure if your advisor is showing you everything that's there, everything that's available. And sometimes they're not because they don't know. I find that's more often the case because they're more focused on growth and in mutual funds and stocks, which is fine. But when it comes to contractual income, that's not usually what they specialize in. You got to work with someone like me who knows the ins and outs of each of these companies and knows what to look for and knows what to recommend. So, and again, I show everything, so it doesn't matter to me. You can look on my website and see for yourself. So happy to help you. Love to help you if you're looking to purchase an annuity. And if you got questions, please reach out, send them over to me. And again, if you want to book a call, there's a link below the video. There's a link on my website, johnstevenson.com. And if you've enjoyed this content, if it's been useful to you, I hope that you will like, subscribe, share, and comment. And I'd love to answer your questions. I appreciate you, and we'll see you next time.